John, before we get to the crypto market and your calls, I do want to touch on the Ava Labs news that we got this week. Our own Bloomberg News team here reporting that Ava cut jobs by 12% this week in a restructuring. We should note it's just the latest layoffs to hit the cryptocurrency sector. What can you tell us about this restructuring?
Well, that's right, Tim. And, that day was probably the toughest day in my 4 years at Ava Labs. But in the last 4+ years, we've gone from 10 people to 270 before this 12%. And the world has changed. Like any fast-growing business, you have to assess where the market is, what kind of products you're building, and analyze it, and then make the necessary changes. So it was very tough. I call some of those people my friends, but it was necessary. And the team is leaner, and I've got 200 and almost 40 people still that I have to think about.
So is this it for cuts
Yes,
for the next year or so?
It was a one-time thing. That's it.
Okay.
Yeah, I guess one thing, though, if you could just pull back and talk a little bit about the market for Bitcoin so far this year. I mean, there's just been this resurgence. Is that going to continue? Are we going to see a Bitcoin ETF?
Oh, I mean, that is obviously the rage. I mean, so first the surge in the Bitcoin prices. Keep in mind, I'm an operator, but I used to be a fund manager, so I keep a lot of perspectives in mind. It was really two things. Recently, you've had call it uninverting of the yield curve from a macro perspective. You had also announced that there would be less supply in treasury auction sales. So that created a backdrop from a macro perspective that was very positive for risk assets, and crypto included in that. But on a micro perspective, you had, I think you called it on your own show, exuberance for these ETF potentials. I think we're getting closer to the reality of one of those. And reality is, I think a lot of these institutional managers are trying to get ahead in anticipation of that.
How are they doing that? Just by buying Bitcoin? Or, I mean, how do you get ahead of that?
Yeah, I mean, I think they are buying. Well, if you look at the volumes, where they're coming from, if you are doing it on centralized exchanges like a Coinbase, or are you doing in a decentralized exchange, which is on-chain? Typically, the crossover investors, the institutional hedge fund types, they do it on-chain. So you can do it either through Coinbase, or you can do it through proxies. Those are basically Grayscale's product. Then you also have other proxy products out there, trusts like that. And you have certain stocks that you can buy it. So if you look at that, you would say that it was more crossover traditional people getting ahead of the ETF announcement.
How much do you think Grayscale is spending on marketing? Because you cannot go into an airport in the New York City area or the Washington, D.C. area and not see an ad for GBTC.
Listen, when you have $30 billion in assets and you charge what they charge, you have decent, marketing budget.
Do you think they're also doing marketing to get ahead of that, to gin up interest ahead of a spot Bitcoin ETF?
They've been very consistent in their marketing even before this. Part of their job is also to proselytize asset managers, and they've been very good at it. I know those guys well. They've been doing it for more than 5-6 years.
One thing, just to go back to the outlook here. I mean, you mentioned this link between a risk-on appetite and demand. What's the chance that risk-on appetite is going to continue into next year? I mean, we've certainly got a lot of macro feedback that's not going to be the case.
Yeah, I mean, everything is likely, and it's a volatile asset class, so anything can happen in the short term. But if you look at it over the course of the year, Bitcoin's actually a lot better than most tech stocks. It's up something like 200 to 300, somewhere between 200 and 300%, literally 200 or 300%. You can't even tell you exactly unless you're really studying it day to day. So actually over the longer period of time, it's still doing relatively well. Can it go backwards? Sure. And I wouldn't even be surprised. People have bought in anticipation of the news and then sell it on the news, so to speak, of an ETF release. But just think about it. BlackRock has 10 trillion in assets. So, if 1% of their distribution picks up on this, that's 100 billion. 100 billion, the Bitcoin ETF, Bitcoin market cap, I think, is about 700-ish. So it's like 14% increased demand, and that's only 1% of just BlackRock. You have Fidelity, you have other big players involved. So over time, it'll still continue to have positive inflows.
Okay. And then just to continue on with the sort of sentiment around the market at this point, can you explain a little bit about how the implosion of FTX is landing in terms of getting new customers in, people sticking with the asset class?
Well, obviously, when it happened, the FTX scenario, it was literally about a year ago. Everything changed. The market structure of the asset class really deteriorated. A lot of players left the system. I think what's good right now, a year later after the trial, is that people are saying, okay, it's almost there where we can put this chapter behind us and move forward. So I think the fact that we can put this chapter, or closer to putting this chapter behind us, we removed a lot of bad actors, is all viewed positive going forward.
I saw last week, I believe it was last week or the week before, Jennifer, correct me if I'm wrong if you know this, that we saw another person accused of being a bad actor in the crypto space by the Southern District of New York. Like, this was an actual, complaint. Where are we in weeding everybody out?
I think we're farther along than people realize. There are bad actors. I mean, I've been in this space for a while. This space has been a petri dish of genius, experimentation, and frauds and scams, unfortunately. Regulatory rules are different in every part of the world, and they're frankly uncertain, so it allows the bad actors to come in and try to take advantage of things. But what is happening with this ETF potential, as well as, again, I'm an operator. Ava Labs is actually a software services company helping people build on Avalanche. The partnerships and the business development relationships we're building with professionals tells me professionals are coming into the space. There's new leadership coming, and it's frankly nice to see a blend of great technologists working with domain experts, whether that be traditional finance or the stuff we're working on in Asia with gaming companies or loyalty rewards programs.
Yeah, I mean, that's my next question for you, isn't it? It's the industry developing and more professionals coming in. What's sort of the vision in terms of pursuing that with corporate partnerships?
So the vision for Ava Labs, again, software service, just like Red Hat was for Linux, is to help people deploy things on top of Avalanche, create real business use cases for traditional companies as well as crypto native companies. So giving them product market fit, getting them business use cases. Stablecoins was a perfect example. I think that is the real first thing in blockchain or Web3, if you will, that has established product market fit. Brevin Howard's research said there was over 11 trillion on-chain settlement in stablecoins in last year. That's the same volume, almost the same volume as Visa over the course of a year. So my prediction, for next year, 2024, is you're going to have the same volume as both Visa and MasterCard in terms of stablecoin settlements.